everybody. We are going live with Mark in 5, 4, 3, 2.
Good morning, everybody. Good afternoon to my friends across the pond. I am Mark Sebastian. I am your only option. Welcome to the State of the Market show. We are here every day at 10 a.m. Eastern time. So make sure you're here every day as we go through the most important stories affecting your trading and take some deep dives into how to make you more dollars. Today, we're going to be talking about earnings. Then we're going to talk about the move to make weed legal. We'll talk a little bit about the unemployment rate that came out, and then I'm going to bring on Hans Albrecht, and we're going to be talking about ways to create income when the market is sitting at all-time highs. Where is there opportunity? So it's going to be a fun show. Let's dig in. And I want to start with earnings. We had Tesla earnings last night. Hannah and I were live when they were initially released. When Hannah and I got off the call, Tesla was up about $15. And one of the things I said was pay attention to when they start talking about spending, capital expenditures. I said, watch how the market reacts to that. If the market reacts positively to higher spend, then we're back in the AI as an investment cycle. If it reacts negatively to higher spend, then AI is a cost. And folks, you can, if I'm going to pull up a chart here of Tesla, and here we go. I want to show this. Here we are after hours. Here's when the conference calls start, and here's when they started talking about spending. And we haven't really moved since. So the lesson here, this is the big takeaway from earnings. Spending needs to have a point toward future profits. It can't just be a cost. And so that is why, as we come in, Tesla is down. Another big spender also came in weak on earnings, IBM. IBM is at its lowest price since February 23rd. They're trading this like it's kind of a software company. They do a lot more than that, but that is the way this is trading. So, of the major companies that have reported, we've got IBM, we have Tesla, we had Boeing yesterday. You've got strength out of some of the industrials, weakness out of software, and if you're upping your spend significantly, they're going to make you pay. Today, at 4:15, Hannah and I are going to be back, and we're going to be breaking down the company that I think is the most important one for the day, and maybe for the week. And it's not a mega cap. It's a large cap. It's Intel. Now, you all know the tear that Intel has been on. Their investments into foundry and expanding chips into AI making a difference. Intel and AMD are quietly, vastly outperforming NVIDIA over the last couple of weeks. NVIDIA's had a nice run off the bottom, back over 200. But AMD and Intel have been nothing short of spectacular. Intel in particular. A year ago, this stock was dead to rights. And now, with the run it's had, it's back over $300 billion. And I believe heading to 500. This is a stock that I believe is going to be $100 by the end of the year, maybe more. So do I see more upside in Intel? Yes, I do. Heading into their earnings, and you'll see this in the earnings, the excitement, right? We talked about yesterday, the market was pricing in about a 5% move in Intel or in Tesla, and historically it's moved 7.5%. Today, we see the exact opposite in Intel. Under normal circumstance, the market is pricing in about a 5% move, 4.95%. Today, almost 9%. There is huge excitement around these Intel earnings. What are they doing in chips? What's going on with the foundry? And all their partnerships. This is going to be an exciting report, and it's going to cascade into Google, Microsoft, Amazon, even NVIDIA. So this is the one to watch, and that's why you want to join me and Hannah today at 4:15 right here. And if you're watching me on YouTube or you're watching me on Twitter, then email my team, support@optionpit.com, and they will send you an invite. So there's kind of our wrap-up of Tesla earnings. You got charged for spending, and your preview into Intel earnings, and we're going to be reacting live today at 4:15. Join me and Hannah. All right, our next story. And, I never thought I'd see this day. But the Trump administration is moving to reclassify cannabis in a major shift that could expand research. They moved to reclassify cannabis as a Schedule III drug. It eases restrictions from the DEA and makes it significantly easier for research to open banking pathways. Before, if you wanted to research what medical marijuana could do, you were kind of on your own. You were in a different country. Because if you were researching the medical effects of marijuana, you didn't have a bank account. And this reclassification kind of opens up. This is a big deal. So who is this a big deal for? Now, many of you are going straight to the Canadian marijuana makers like Tilray or Cannabis Growth. Have you ever heard buy the rumor, sell the news? These companies are not going to be huge beneficiaries. They will not. One, this doesn't reclassify it where, one of you can be walking down the streets of Nashville smoking a joint. And if any of you try and bring edibles on an airplane, you're still going to get caught. You're still going to get in big trouble if they catch you. But the winner is going to be some of these drug companies that are emerging. And this just came out a half an hour ago. This is a story I'm going to be following up on. Because there is going to be deep research. And there's going to be some opportunities. But I'll tell you, it's not Canopy Growth. And I would imagine if we do move toward legal marijuana, RJR Reynolds and Altria are going to be your stocks that you want to own, or Philip Morris. I'm telling you. If it comes legal, big tobacco is going to become big marijuana. I guarantee it. So, as fun a story as Canopy Growth is, I think you want to take a pass on this one. I do. All right. Now, looking at the economic reporting this morning, we had a little bit of a uptick in initial jobless claims. Previous was 2008. They were expecting about 208,000. Median forecast was about 210,000, and we came in 214,000. And then just about half an hour, we got flash PMI for services and for manufacturing. And they both came in nicely ahead. Services PMI, they were expecting 51. We got 51.3. Previous was 49.8. Below 50 is recessionary. So that's a positive news for the economy. And the manufacturing one was a big beat. Previous 52.3. We were looking for 52.5. And it came in 54. That is a big number, folks. Now, tomorrow, I'm not going to be here tomorrow. My niece is getting married. I am flying to Philadelphia in the morning to go celebrate her wedding. So you'll be joined by Olivia Vaz and Tim Colby. But right around the time that the show begins, consumer sentiment's going to come out. And that one's going to be really interesting, and that one could drive the market. Keep an eye on that one. The consumer has been shockingly resilient, despite gas going up about $1 a gallon. And if you're in California or Illinois or New York, even more. Those states tax gas as a percent of the cost. So if gas goes up $1 in Texas, it goes up way more than that in California because the gas is going up and the sales tax on that gas is going up and all the extra fees. I'm interested in how resilient the consumer can be. So keep an eye on that one. That's going to come out right at the top of the show tomorrow. All right. Now, at the halfway point of our show, we have the S&P down about 14 points. Q's down 1/3%. Dow down, about 1/10%. And the Russell 2000 down 1/10%. Industrials in the Russell continue to outperform the other two. The Dow, and I've said this a couple times, the Dow, the Diamonds, DIA, this is the only major ETF that is not sitting at all-time highs. I think it's an interesting long as a swing trade to play a little catch-up with the S&P 500. So if you're looking for a way, you're looking at the S&P at all-time high, and you're wondering, what do I do in these major ETFs? Diamonds aren't just a girl's best friend. They might be Mark Sebastian's best friend. Speaking of the markets at an all-time high, people ask me pretty regularly a few questions, and one of the questions they get is, Mark, the S&P is at an all-time high, and I'm looking to ramp up the income and ramp up how much money I'm making in my portfolio. What do I do here? Can I sell puts? Do I do credit spreads? Should I be buying options? How do I take advantage of the market that is sitting at an all-time high? Right? They're kind of frozen. Right? All-time highs bring more all-time highs. But many in the public, many of you are afraid of buying the top tick. Right? Nobody wants to buy the top. So to help us through this quandary, I'm bringing on our very own head of income trading, Hans Albrecht. And he's going to dig in and discuss how do you take advantage of a market at all-time high using income strategies? And where are the sectors that he's digging into? So with that, let's bring Hans in. Good morning, Hans.
Good morning, Mark. Good morning, everybody.
It's say hi to Michael Landon.
I know I've got the Highway to Heaven thing going, and then my wife kind of laughed about that, and she said it's a bit like Touched Like an Angel, and I don't remember that one. Touched Like an Angel, was that like a follow-up to Highway to Heaven?
Moira something or other, but there would be an adventure, and at the end, as she was disappearing back to being an angel, there would be a glowing light behind her of joy, and she would give like a life lesson on how to best really capture love. It is a show that my parents, now octogenarians, loved back when they were in their late 50s, early 60s. It was like it was the next iteration of Murder, She Wrote, if you will.
Yeah,
people want
good. Good
to murder.
Good wholesome TV, right? Before TV got very serious in the 2000s, kind of started with The Sopranos, and it was like, okay, we want these flawed characters, and they've got all these problems, and TV got serious. Boy, remember the Love Boat, Touched Like an Angel, things like that. It harkens back to a simpler time, doesn't it, Mark?
It does. I still enjoy a good old episode of Gilligan's Island. R.I.P.
And you know what? I'm sure with satellite, with all the TV channels now, you can probably find in Touched by an Angel 24-hour channel and a Gilligan's Island 24 channel, so you can still experience all those wonderful moments with the skipper and everyone and Gilligan. So income, guys. So we're talking about income today. You took a little bit of. I wanted to just sort of mention, look at the software names today on those now numbers. Now the now numbers weren't bad. They weren't bad. The guidance was a little so-so. And so I think it's kind of back to the same playbook, which is, anything that can be coded is extremely disruptible. So my worry is that, and I keep seeing people talk about, look at these numbers, they're fantastic. Why aren't the stocks reacting properly? It's because investors are saying, this might be as good as it gets. We are literally just getting going with agentic AI, with the disruption, with the ability to create software very easily. And that doesn't mean, Now or Salesforce get replaced tomorrow, but it does mean that investors and the markets, which are forward-looking entities, are going to look down the line and go, well, what does this mean for everyone? So you're seeing the whole world of coding get absolutely slammed again. And that it's just a very, very difficult place to allocate to, and I keep seeing people trying to pick the bottom in Adobe, and that thing's down $20 again today. Anyway, it's a tough game. And one of the interesting stories I'll say before we talk about income is there's an interesting story developing with Claude. So Claude is one of these LLMs, Anthropic, and the demand is so insatiable, and that's part of what's driven back the semiconductors and some of the more physical aspects of AI lately, is that we're seeing signs that this is not. People compare this to the late 90s and they go, well, we laid all this fiber and it ended up being a whole bunch of spending. No. This, every bit of capacity is accounted for. Companies, hyperscalers are saying we don't have enough capacity, and Claude made a critical mistake. So this is kind of interesting. I was reading up on this maybe 18 months ago. Amadei, who's the head of Claude, which is now the most popular, they're wiping OpenAI practically off the table at this point. their model is so popular, their tools are so popular. But 18 months ago, he said, well, we got to be careful with spending. What has OpenAI done? They've spent. Claude sort of said, well, we're going to be careful, because if you're not careful, you could go bankrupt. And so this is coming back to roost for him right now. The demand is so high, they're throttling back. They don't have enough compute. And so I think that's a very interesting story. Back to your earlier point about hyperscaler spending. This is very difficult to assess. I'm not saying it's easy, but you're going to get, on the one hand, investors are going to want to see spending, because if you don't spend, you're not going to have the capacity. You're not going to be able to fulfill the amazing demand that's out there. But on the other hand, if there are any signs that the ROI is nowhere to be seen, then they're going to punish the stock. So we are really sitting on this knife edge, figuring out who's doing things well, and Google's probably doing things well, as an example. And some other companies may be dropping the ball. So the whole spending thing is absolutely fascinating. And I think the lesson here is that you got no choice. You got to spend. It might not be the right thing to do if you don't end up being the top 3 models or the top 3 in whatever you're trying to do. But if you don't spend, you're not keeping up in this age of ultimate disruption. I thought that was a fascinating thing that I read about Claude. So I think what that means is CapEx is here to stay.
I was surprised they punished Tesla as hard as they did on that number, but they gave it was a $30 swing when that spending number came out. So, you've got to be real careful, and you've got to make a really strong justification. I don't think that Tesla number bodes that well for a Microsoft or an Amazon or a Meta or a Google next week. Maybe Google seems to be the smartest about how they're spending. But we've got those 4 names all in the afternoon on the 29th. It is going to be a heck of a day on the 29th when all of those hit. But you're right.
45%.
You're right. We're sitting on a knife edge.
On a knife edge. That's 45% of the S&P by market cap, by market weight, is going to be reporting next week. So that doesn't mean 45% of the companies, everyone. That means of the sort of the importance from a market weight standpoint. So if the MAG has really come all the way back up, we saw those valuations at multi-year lows, and they have come back as a result. Now, there's still a lot of room if they can show what they're doing is working, and people decide that, hey, listen, I'm back on the MAG train. But there's a lot of big ifs happening next week, and we don't know what the market's reaction is going to be. The spending, the results. Google is monetizing all over the place. They can afford to spend some money and make a couple of missteps. Some companies can't. And the market is really struggling. I mean, look at Meta. The earnings came out. They were great. It went to $750. It dropped $220 afterwards because they said, well, we're not sure how their execution is going to turn out. Now it just rallied back another $150. The market is very confused, and you really it's a trader's market, as you've been saying for a long time now. It is a trader's market. And that's why watching this show every single day and understanding the offerings that we give people at Option Pit is going to be more critical than ever, because I don't think the age of disruption that we're in, that's not a 3-month story. That's a welcome to the next 10 years of your life kind of story if you want to be involved in market.
And you've been so out front of this, and we all know that you're a master of creating income on top of your turbo trades that are, when you're gunning for a home run, you're always trying to come up with unique ways to create income. What are you doing right now? What are some of the things you're looking at in areas where you're trying to collect income trading options?
Well, there's the income portion, and then there's the let's get strategically greedy part that we use with turbo trades. It's been kind of interesting because I mentioned to you this morning early on, I said off camera, I said, it's been interesting because if you look at the industrials, which are good, right? We're rebuilding, we're retiling the earth for AI, and we need all this physical stuff. That's why I like the stuff that I can stub my toe on or drop on my toe. I don't know why my toe keeps getting involved. It's not happy about it, but it's the real physical stuff that's required. to build this whole new world. And so what's interesting is the industrial if you look at the XLI, it hasn't reached those new highs necessarily. It's starting to battle back again. And I think as a whole, it's good. But what we've seen is that a number of names that we've been playing, like GEV, PWR, a whole bunch of these industrial type power, fix 'em up type names, physical world names, have been smashing to all-time highs. GEV, we put out a list at the beginning of the year at Option Pit. What are our favorite stocks? GEV's on my list. It's almost a double already.
You crushed this one. You absolutely crushed this. You called it. You crushed it.
I didn't think this would happen, but I understand a good theme. But the interesting part is, if you look at the group of those kinds of stocks, they're not all necessarily doing well. So you kind of have to be, first of all, you've got to be in the right race, and then you've got to be on the right horse within that race. And so that's why this is getting tricky, right? It's a very binary world out there now. There's a winner and there's a loser as far as the market's concerned. This one's going to do fantastic and this one's going out of business. And that's probably not even close to the truth, but that's how markets are treating things. So in the income world, what we're doing is really trying to position in the very best names, in the very best themes, and extracting that premium. And so we can see right now that it is actually kind of a smorgasbord for I don't even know if people know what that means, but it is a wonderful environment for premium selling in the right things, because we have high option premiums. We've got stability, which is that word that I always like to use, stability in certain parts of the market, and software is not one of them, clearly. So you want to make sure that you don't keep getting sucked in by some guy on CNBC who goes, yeah, I think this is the time to dive into Adobe. The numbers are great. Guess what? Numbers don't, last year's numbers care this much for Adobe, right? They care this much. Maybe I care, okay, the balance sheet is important. I want it to be able to survive for a few years as it figures. Okay, there's stuff that's important, but I don't care about those numbers. You want those strong stories, and we're getting those beautiful premiums. We're doing put spreads. We're doing some other strategies that really take advantage of extracting that high premium in stories and names that are really strong.
Yeah, and to your point, I did a little dive on this. When you brought this up, he goes, we're at all time. What Hans said this morning when we were prepping for the show, he said, we're at all time highs and the VIX is near 20. It's not a 12 VIX at an all time high. That's opportunity. And then I went and looked in 26 days to expiration. If I sold an at the money put in Apple, the last time Apple was trading at 274-ish, I would have collected $6. Now, with the VIX up near 19, I'm getting $7.50. That is a 25% increase in premium out of Apple. And that's just one example. Speaking of examples, Hans, you're going to give people not just an example, but an entire 3-day lesson on producing income. And we're kind of opening the doors a little early here, folks. Believe it or not, I'm about to post this landing page for you to register. It's totally free, no cost. It's hosted by me and Hans. We're calling it the Great American Income Project. It's next Tuesday through next Thursday, 0 cost. And I'm inviting you guys to join. And again, there's going to be a cool little video there at some point. But I wanted you guys to get first crack at getting registered. So I am posting this right now. And I want you guys to register to join Hans and myself next Tuesday through next Thursday. And again, at 0 cost. And Hans is going to be walking you through all kinds of ways to capture income. And with the market at the all-time high and the VIX still near 20, this is one of the most exciting times, I believe, to be trading for income and creating that income. Yeah, save your seat and join me and Hans. In addition, make sure you check your email boxes. I am sending you our Intel earnings preview. And if you're not a member of our Option Pit email lists, email us, support@optionpit.com. If you're watching me on YouTube or Twitter, if you're watching us there, email us, support@optionpit.com, to get access to the Great American Income Project and to join our mail list to get access to our Intel preview. Hans, you got anything you wanted to add on what you're going to be doing next week?
Well, the great thing about income is it never goes away. The world changes, technology changes, but the need for income doesn't go away. And so this is something that people really want to focus on. And what we're going to talk about is how the old playbook for income you can toss out the window. It's just not the same anymore. I remember back in the 90s, you might remember as well, Mark, you're a bit younger, but where we'd be watching the board as a market maker, trading, slinging things back and forth. And when bonds were going down, stocks were going up. Like clockwork, stocks were going up, bonds were going. You could bet on certain relationships, and we've really seen that that's not so much the case anymore. This whole idea of 60% stocks and 40% bonds, and you're just not getting the ballast against your stocks that you used to get. And so I think it's important to understand the new framework, and there are a lot of reasons for that, which we're going to talk about, and we're going to talk about how to take advantage of this new income regime.
Awesome. Is Claude going to be attending? No, but I can promise you Claude will be used in, as it already is by Hans, to help you through using some of the AI technology that we use here at Option Pit every single day. I was just showing my team, my Delta Strikers, how I use AI to filter out major order flow. So yes, you're going to get, I promise you, this is Hans we're talking about, Mr. AI. He's going to be, sewing in some Claude, I guarantee it. So folks, we're
going to invite that French guy. I speak a bit of French, so we'll get along with Claude very well.
You know how they say, you know how to say cut the grass in French?
No grass is le gazon, isn't it? Le gazon.
Sorry, terrible dad joke, but fun to close
Say it again,
out.
Mark?
Hans, thank you so much for your time with us this morning. Again, click that link and join me and Hans starting Tuesday. And make sure you don't miss Hannah and I tonight at 4:15, and check your email boxes for that Intel earnings primer. So for Hans Albrecht, our head of income trading here at Option Pit, I am Mark Sebastian. I am your only option. Vaz and Tim will see you tomorrow. Thank you for joining me. And as always, thank you, Amin. Have a great day.